Joining us now is Judy Shelton, a senior fellow at the Independent Institute and a former Federal Reserve Board nominee. She's also author of Money Meltdown: Restoring Order to the Global Currency System. Judy, I'm gonna sort of just put my finger on the pulse of how we're viewing the latest news from the Fed, and I think we're supposed to be to accept that they're doing pretty well here. I mean, they're going to finally taper. Finally in time, and they're not too late tapering, because we've had the Delta variant has slowed things down a little, slowed employment down a little. So it was prudent to stay very accommodative and to continue this massive bond buying. And now they're going to cut back on that. But you make some interesting points about how much that they own after all this bond buying, and 39% of the nation's GDP is owned from all the bond buying during QE.
Right. I think those are pretty big numbers if you want to consider the appropriate role of a central bank in a free market, free enterprise economy. The Fed announced yesterday that despite these indications of recovery, it is going to continue providing monetary stimulus, albeit it's a slower pace. But between now and June, the Fed is going to purchase over $400 billion in government treasury debt and mortgage-backed securities. And that will give them this huge portfolio of assets equal to 40% of our nation's gross domestic product. And the interest rate will still be zero in June.
Still be zero. And I was thinking through some of this. The Fed can say, well, OK, but, we are cutting back and we needed to stay fairly accommodative because of these other issues. And they'd even point to supply chain problems. But I think you'd point to, are they reacting to supply chain problems, or in some respects, kind of being the arson putting out the fire? They're responsible, perhaps, for some of the supply chain problems.
Well, I think the monetary accommodation is just fueling the fire of fiscal stimulus. So it's exacerbating the inflationary pressures. The Fed really doesn't have the tools to address the problems that our economy is facing. They can't make people go back to work, and they can't resolve those supply side issues. So they just have these rather fundamental tools of trying to manipulate the interest rate. And it's not clear at all that that's going to increase output or directly resolve the problems that are occurring in our economy. I think we should let free market signals help to resolve some of those blockages and get things back on the right road.
Well, for whatever reason, the Fed seems to assume that it's all resting on its shoulders, that managing the economy is something that it needs to do for all of us. And it's almost, as you call it, it's almost paternalistic, and now a very big part of our lives and a very big part of what goes on in the economy. You don't think it needs to be that way? And I guess if they're enabling profligate spending in Washington, then once again, they're not helping. They might actually be adding to our issues that they then think they're going to solve.
I do think it's a paternalistic attitude. I almost cringe when I hear the Fed say we're going to continue to support the economy, as if it is managing it. It's really a wag the dog situation. The economy is made up of the individuals who are active within that economy. And I think that I trust their judgment more than government-directed efforts to manage this economy. I think the message from the elections this past week to some politicians was that people want them to get stuff done. I would say our message to the Fed should be, butt out. Don't try to manage the economy. Let free markets work. It would be very nice to know, what is the real cost to borrow? What would the supply and demand price signals tell us about where capital should be directed to have the most efficient recovery and to increase supply and to help us really deal with the actual problem that's confronting us. And I think the Fed muddles those signals by providing monetary accommodation at a time when the economy is showing strong signs of growth and recovery. I think it's hurting more than it's helping.